The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the January 2nd, 2015, fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I believe we should be pioneers of our future versus prisoners of our past. You know, there's another guy, there's many out there, guys and gals, but there's one guy out there. He believed in perseverance. His name was Abraham Lincoln. Now, most folks don't know this about good old Abe, but Abraham Lincoln never stopped reaching for his dreams. Of course, what he had to overcome, it's amazing. He had to overcome the death of his mother and his sister when he was a young child. He had to overcome the death of his sweetheart. He had to overcome a nervous breakdown. Most folks don't even know that about Uncle Abe. He had to overcome the death of his three sons. How about just those? That wasn't enough. Shoot, he had to overcome the defeat as a candidate in the state legislature back in old 1832. He had a failed business partnership, of which there was a large debt, and when the other partner died, he had to work on paying that off. He was defeated as a candidate for Congress, both in 1843 and 1844 out there. Heck, there was more defeat for him, right? He was defeated as a candidate in the Senate in 1855. He was defeated as a vice presidential candidate back in 1856. Yeah. He had a lot to overcome out there, but I would have to say, and I would think you would agree, is that Lincoln persevered. So, folks, here's the deal for 2015 out here. Just simply work hard at your outcomes. Forget those resolutions, smesolutions out there. Just simply make something an outcome. Make it an outcome, folks, and then just simply work hard at that. Overcome the obstacles that are going to be placed in your path, because guess what? There's going to be obstacles placed in your path. Above all, just simply persevere. Just follow Uncle Abe out there. Because perseverance, that absolutely is the difference between success and defeat. So as we begin this terrific 2015 together, let's always remember that life happens for us, not to us. For us, not to us. One little change in words out there. Because when we live by that principle, what it means is that you and I, we can find the gift in any set of circumstance that the universe is going to throw at us. And I can guarantee you one thing, the universe is going to throw circumstance at us. So I hope each of you had a wonderful New Year's celebration. Let's keep it up. Let's kick it up a notch or two. Let's make 2015 the best year ever for both you and I. I am absolutely grateful for your presence here today. Of course, I'm here to serve you, and that means you can give me a call at 877-927-6648, or internationally, you can give me a call at 727-445-1044. That way, you and I, we can go hunting for bulls and bears. This is Fantastic Friday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures up 86 points. They're trading out at 17,838. We've got the S&P futures up about 11 points, trading out at 2,063. NASDAQ futures up 24, trade at 42.57. Russell 2000 up about 6 points. Trade at 12.06 and change. King dollar, that's on the move, up 543 ticks as we speak right now, up 54 cents, trading out at 91.19. The euro getting crushed this morning. We'll take a look at the currency pairs. Hard currency-wise, Goldilocks back $13 right now, trading at 11.71. Silver's flat. She's trading at 15.59. You've got light sweet crude off 63 cents, trading at 52.60. Natural gas up 6 pennies this morning, trading at 2.95. Let's see, what do we have going on over in Asia and Europe here? Let's go take a look at Europe this morning. I believe they're both back on. Everybody's back online. Let me see. We've got the FTSE is flat, so no big deal out there. She's trading at 65.63. We've got the DAX trading out at 97.71, down about 33 points. Not that big of a deal out there as well. The Nikkei Nikkei off 279 points. I don't know if the Nikkei was actually open last night. Let me see here. Give me a moment here to switch to my daily chart. That'll make things a little bit easier. No, the Nikkei was not open last night. That was on December 30th, so they're still partying over there. Of course, they're celebrating their New Year out here. Have any of you had the Japanese New Year food out there that brings about good, like it's called oseche? Oseche. Extraordinary meal out there. I do it pretty much every New Year. Every New Year, so I may do it again. I might do that tonight instead of just the normal, sushi sake experience out there. You can only get it for, you got to go to a real authentic Japanese restaurant in order to get it, and it's pretty wild type food if you are not used to eating, but it's all good luck food. Nothing like good. How about some black-eyed peas? I'm sure many of you had some black-eyed peas yesterday. Just to, we got to do everything that stacks the goodness into our benefit out here. In any event, let's go take a look at the markets. Let's do this here. Well, I guess let me first answer the question for you. How many of you, when you saw the market come crashing down, so-called crashing down, that's not really a good expression, but when you saw the market moving lower on Friday into the close, how many of you thought, oh my God, that was it? The highs have been made, and that's it. How many of you thought that? Probably most of you, not all of you. Those of you that are subscribers to my newsletter service that I've been able to teach out there, and those of you that are listeners out there, you know that the answer was there was no way that we were going to see a bounce, right? You absolutely knew that, didn't you? You knew that you had an 80+% chance of seeing at least a bounce or potentially a low in the marketplace today, didn't you? Right? You knew that. How do we know that? Well, we knew that because of the VIX index. We knew the VIX index, when it has a one-day rate of change greater than 10%, there is a 80+% chance of a bounce within a couple of days out here. If we take a look at this one VIX chart that I've got on my screen, we took a look at this when the last time that the market was making some lows out here, which was back in the middle of December. And the chart, look at the top portion. Hopefully you're watching us on TigerTV out here. If not, just come over to the homepage of TFNN.com. Over on the right-hand side, you'll see a button, three little smartphone-type devices. Click on that. The show will stream live to you. Of course, you can catch the archive of this show on Channel 9. If you want the video version of it, you just simply got to join the become a member at TFNN. Now, or you can watch the archives on Tiger TV. We got so many different ways for you to be able to catch these shows. Of course, we're streaming live through the eSignal platform as well, so that's a cool thing. Now, the top portion of my chart here happens to be the VIX index. The bottom portion is the S&P 500. Top portion here has got a 50-period Bollinger Band, one standard deviation on there, so it's not really much. But what we do know is that when price gets above, when it starts extending above that, the top of that Bollinger Band, it starts to get a little bit too stretched. Now, real tops typically occur when the VIX gets all the way down to the bottom of the Bollinger Band. We didn't actually see that take place here. We saw back here on December 24th. We've been in a light trading, and today ought to be light trading as well, right? Most folks aren't really coming back to work until Monday, Tuesday of next week. I'm going to say they don't really come back into work until Tuesday. Monday, you got to hug everybody that you didn't see because you're on vacation, talk about, all that kind of stuff out there. But the reality is that things don't really get rocking and rolling probably till Tuesday or so out here. But what I can show you in the bottom portion of my chart out here, if you take a look at the highs that were formed back in December 5th, you can see that the VIX index here, which we're looking at, was at the bottom portion of this 50-period Bollinger Band out here, right? Let's come back and take a look at the top or the highs on September 19th. You can see that where the VIX index was trading right at the bottom of that Bollinger Band. Are we there right now? No. Are we there right now? No. Were we there back here on December 24th, on December 26th? No, we were not. If we take a look at, we can go back even further in time out here. I guess here's a high back in April of 2014, back in the S&P 500. It wasn't much of a move down, just moved down in the middle of April. But of course, we saw that low, or the high, I should say, came from the VIX reading down at the bottom of that Bollinger Band back here. Maybe a high back in January 2014 out here, January 15th. It looks like where the high was actually put in. We saw price coming from where? From the bottom of that Bollinger Band. So we're just simply not there as we speak. We've got that one-day rate of change, which was like 20+% on Wednesday out here. Got to get my days all acclimated because we're in Friday as we speak right now. So to see the market, now the market's going to bounce. and it should hold today. It should hold today. It should hold on Monday. It should hold maybe Tuesday out here. But it absolutely should hold today. We should see the markets trade higher. We should see the markets trade much higher than where we're at right now. That's a very, very likely outcome. Now, I can't control what's going to take place at 9:31 or 9:17. We're at 9:16 right now. What I can do is say, hey, what the probabilities are inside of the market. Just as the market was making a move lower here on Wednesday with that one-day rate of change inside the VIX, it was kind of like, no way. It's really more of a gift out there than a prognostication of things to come for a short period of time. Now, that's what's going on inside the markets. So, let's go take a look at where we actually ended the year, ended the month of December out here. Let's take a look at what actually took place, and we'll start with looking at the monthly chart. So when we take a look at the monthly chart here, this is a monthly chart for, I guess we'll start with the Russell 2000, since that's the first chart that popped up on my screen. It doesn't matter. We're going to look at the Russell, the S&P, the Dow, and the NDX out here. So when we're taking a look at this chart, by the way, is the horizontal lines that you see going across my screen out here. These are the horizontal trading ranges out here. Different than Bud Rolf's work because you can see I've got red and green. I could add blue lines out here. The red lines are monthly. The green lines are the weekly. We're looking at a monthly chart as we speak right now. I'm just simply going to leave these two sets up here. The dotted lines are the midpoints, but let's not look. What we're looking at is horizontal levels of support and resistance out here. So inside the Russell 2000, which even with the downdraft that we saw on Friday, still closed at 1204.69. The actual line of resistance, old resistance becomes new support, is really 1201.14. Now, we're not going to get too hung up into the pennies and even the dollars here. What we know is that the Russell 2000 is up against a significant level of resistance. This level of resistance has been around since the first time it ran into was back in March of 2014. So we've seen the consolidation area inside of the Russell 2000 for quite some time. Now, the Russell 2000 in the month of January closes above 1202 out there. That would be very bullish. In fact, that would suggest that we would see price probably run up to the 1303 level. Now, as I mentioned on Wednesday, what I think we're more likely to see is a failed breakout of even on this next attempt here inside the Russell 2000. Now, that failed breakout could take us down to the bottom of this trend line. This is a trend line that's been in place since 2011. And that's the first trend line that we would want to pay attention to. So that would be, if we see any kind of January effect out here, it's not going to take place on January 2nd. It's not going to take place probably on January 5th as well out there. But if we do see any effect that does begin to take hold between now and the middle of the month, that's really going to be the level of support that somebody would want to be trading either TNA or TZA, where you'd want to start taking a look at managing your trades out there. And that's inside the Russell 2000 out here. We get back from this break. We'll go take a look at the S&P 500. We'll go take a look at the Dow. We'll take a look at anything else that you'd like, but you got to give me a call. That's the way we do it here at the Hotel California. You got to check in with us at 877-927-6648. We'll be right back, folks. Welcome back, folks. Dow futures up about 78. NASDAQ up about 22 points. We're going to start off here this segment taking a look at the S&P 500, again, the monthly chart, since we did end the month of December out at 2,058. Now, if we take a look at the candle formation out here, referred to as a high wave candle, just simply means that it's confused. That means it's about to learn something out here. Nothing bearish about that candle formation, its message, just simply that it's confused out here. Now, what we did see in the month of December, as we take a look at it, we saw price get down to a price point of 1972.56. 1971 is the actual horizontal trading range boundary line out there. So that level is acted as support. Will that level be tested again? It's possible. It's absolutely possible that we'll see a test. I don't really, the pullback that we should expect and will occur in January. The question is just going to be, what is the depth of that correction out there? But I would expect that 1971 level will hold. So if we're fortunate enough to see a price move back there, that's where you would want to go ahead and start taking a look at at a price at least being able to get long. If you come back and you take a look at other Januaries here, let's just do that from October. So here's October. That trend line, by the way, this is the S&P 500 on a monthly basis, coming back to an important trend line. That's what we saw get hit and hold back in this current October. Of course, these yellow lines out here, these are all the October-ish lows inside the market. So they are they're important. That's really what you want to expect inside the market. Now, if we take a look at January, here's December 2012, where my crosshair is at. We saw really, for the most part, you didn't see any kind of give back come January of 2012. The actual low was the actual open, which would be today's, in essence, open out here. So you didn't see much of, you didn't see any kind of pullback take place until the little May swoon, and then we saw a nice little bottom form back in the June time frame. So that was back in 2012. We take a look at 2013. We move forward to January 2013. January 2013, we did see the market pull back, and the market found support, by the way, at a low back in February. February 5th, I believe, was the day, and that February 5th low came in at a price point of 1737. 1731 was actually the horizontal level of support from a trading range. 1756 was the monthly level out there. So now, what is it that we should expect here this month? I still suggest that we see some kind of a pullback retracement. Doesn't take place today, doesn't take place necessarily on Monday as well, but some type of retracement that you want to be able to take a look at, then putting your money into the market versus, I think, putting the money into the market here today out there. If I were managing your pension funds, that's what I would be doing. I'd be sitting on that cash here at least for the next couple of weeks out, unless I see some other signal out here. Now, what is it that the S&P is likely to get to? I would have to say that the S&P is headed for that 2196-ish range out here, and that'll become really the next level of significant resistance inside of the S&P 500. If we take a look at the Dow itself, the Dow, I believe, formed a doji candle, real doji candle here for the month of December. The actual open was 17,827, and the close was 17,823. You got to like that. Now, that can become resistance. So that says here when the Dow clears 18,103, that will be extremely bullish. At 18,013, that happened to be the midpoint of the monthly horizontal trading ranges out there. So if the Dow can clear the high of the month of December, 18,768, ought to be about the next move top side. Support ought to be the 17,180 level. That was the monthly horizontal trading range level that was tested in the month of December. If price does pull back, look for 17,180 to be a strong level of support inside of the Dow. If we take a look at the, let's look at the NDX 100 out here. See what it is doing. It has also found support at both its monthly and its in the month of December. Its monthly and its weekly horizontal trading ranges. 4403 is the next level of resistance. If you see the NDX get above 4403, she'll want to trade up to the 4670 range out there. So that covers our S&P, our Dow, the NDX, the Russell 2000. That covers all of them. So we get back from this breakout here. We'll go see. Let's go check in on Goldilocks. Gold is trading off $13 this morning. We'll check in on light sweet crude. Hey, we'll check in on the currencies. How about the euro? The euro. In fact, we'll take a look at the euro from a monthly standpoint. Oh, I guess we have just a few moments. Let me pull it up on my screen here right now. Let me pull up the euro, give you an idea where this is headed to. Now, this is a daily chart. Let me put the monthly time frame up on my screen. Come on, come on, come on. Where are you? Where are you? I got just a few moments. Come on, help me out here. The really important spot inside the euro is going to be 118. 118. If we see it close below that, then we're down to about the 111 area. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Off to the races. We got the Dow up 96 points, trading out at 17,920. S&P trading up 11.5, trading at 2,070. Composite up 33 points at 47.69. Russell 2,000 trading out at 12 up 7 points. Gold back $14. Silver is flat out here. Light sweet crude up 41 pennies. Natural gas up 8 cents. Leading the charts, the upside, Google up $4. Visa up $3.70. Brainstorm Cell Therapeutics up $3 and change. Illumina up $3 and change. A Perfect World Company up $2.83. Amgen up $2. Gilead up $2. GoPro up a couple of bucks. Celgene up $1.64. To the downside out here, we've got Mibidex Group. That's down 16% off $1.93, trading out at $9.60. You've got Nephrogenics down 7%. That's off a buck. Sasol, SSL down 98 cents. Not a lot to the downside as we speak here inside of the markets. Okay, so let's go back. Let's take a look at currencies, both hard and soft. We began by looking at the euro. Now I had the monthly chart up on my screen for. So we're taking a look at the monthly chart. Now, inside the monthly chart here for the euro, the key level of support out here takes us back into June of 2010. And that low out there is the $1.18, 1.187. This is the euro futures contract that I'm looking at. This is a continuous contract out here. Now, that's a level where we saw a nice big Morningstar reversal pattern. So that low should become support. Now, you've also got the euro right now. It's trying to take on its swing point low from July 2012. That low is 1.2051. You are just slightly above it. Are you slightly above it? No, you're slightly below it, just slightly below it. So a close below 1.2051. Now, this is a monthly chart, again, that we're looking at. That starts to bring the A to B equals CD down pattern into play, into that 111 type area, and that's what's going on inside the euro. Now, switch back to the daily chart out here. There's some smaller A to B equals CD down patterns. We can see the euro on a daily basis getting into the oversold condition out here. The daily pattern out here for the A to B equals CD down pattern, I'm using the high from October 15th. I'm using the... No, don't want to do that. What do I want to use here? No? Tell you what. Actually, I mean, let me put this one smaller one. It's already made the 1-to-1. This really says you're looking at probably about $1.19 for the euro at this stage, and short of any type of bullish reversal signal would look like 1.1936 is really the next move or so for the euro. That's a short-term move for the euro out here as it gets into its oversold condition. So that's what's going on inside of that currency pair. If we take a look at the U.S. dollar index out here, U.S. dollar index up at highs. Let me put this on a This is the continuous contract. So let me go ahead and put this on a monthly chart out here. This will give us a feel for whether this is above swing points or what. So let me see out here. And or what I'm referring to, no, it's not. So it's also trying to get back into this level of potential resistance out here. And that would be a price point of about 92.50. So you're 91.23. So look at that 92.50. Remember, the U.S. dollar index, nothing more than a basket of 6 currencies out there. So, on its own, you've got to take a look at what's going on with the euro, the yen, the pound, Swiss krona, Swedish franc, and the Canadian dollar out there. So you got those 6 currencies that are making up what's going on inside of the U.S. dollar index out here. But it does look like that 92.50 level is where she is headed to. Now, back in the world of light sweet crude, as you know, in the case of light sweet crude, we're looking for, this is the monthly chart that I've got on my screen, the monthly chart out here. Let me pull this off to the side. That's giving us a projection of about $50.67. But what it has done right now at 52.75, and the actual low that we have seen out here has been 52.03. That was earlier this morning. That makes a 1 to 2.618 A to B equals CD to the downside. So we ought to be getting into an area here where light sweet crude begins at least some type of bounce out here, some type of support. That's somewhere between where we're trading right now and $50.67 out here. But at this stage, if I switch over, we take a look at the daily chart here. Again, it's just a continuous contract I have up on my screen. That's okay. For our purposes, there is no bullish reversal signal or anything that we see. So as we speak right now, our expectation needs to be $50.67. Now, if we see light sweet crude today close anywhere above 53.76, you're at 53.02 or so right now, but even closing at 53.77, you'll have a key reversal session inside of light sweet crude. You'll have that as price was moving lower with less weakness out there. So that is actually the sign of that's a sign of a reversal. you'd really need to see some follow-through on the following trading session, meaning tomorrow. But we're not there yet. We still don't have a close above 53.76. So 53, that's what you want to write down on a pad of paper, for anybody that's got the cojones to go ahead and trade light sweet crude out there. That would be your first potential bullish sign inside. And I'm just saying just simply for a bit of a bounce out here. Well, who knows? Who knows what it would be? It would be the first sign of a potential reversal inside of light sweet crude. So we've covered light sweet crude. We didn't take a look at silver. If I do that, though, let's just move over to the long-term charts out here. This happens. We looked at the S&P. We looked at the monthly. We looked at the S&P. Let's look at silver out here. So in the case of silver, if we try to identify strong areas of horizontal support, you're really at a price point of probably about the $13.95 area. So here's a monthly chart for silver. The green and red lines here, again, our horizontal trading ranges. Red, our monthly. Green are our weeklies out here. We did get a key reversal on a monthly basis last month, in the month of December. So if we're trying to identify some pattern that shows the potential of a bottoming out here, in the case of silver, you got a key reversal session. You can see how it's just slightly green. Our actual open in December was at 15.39. The close was 15.59 out there. And the prior month's high and low was exceeded, and we were coming from an extended condition. So that's now I'll put gold up here. I don't believe we have the same pattern inside gold. GC pound sign F. Whoops, equals 120 out here. And we got a bullish engulfing candle, but we do not have a key reversal session. Do we have to have a key reversal? No. But I just thought that I would come over and take a look at it. Inside of gold, 1159, you're at 1171. That ought to be a decent area of support. We'll see if, in fact, gold can get down there. Now, in the case of Goldilocks, the ideal spot that we're looking for inside of gold. Let me see. It's off 1290 right now, but I believe I've got that up on our screen out here. Yeah. Or I don't have it on my screen, but I'm going to put it. Our ideal spot is 1152. So 1152, 1153, 1154, 1155, somewhere right around there. You're at 1171. So I keep saying, come on back to pop-up, baby. And that would be a pretty decent area. Does not mean that it holds there, but that would be a pretty decent level, or should be a pretty decent level for support inside of gold. Let's take a look at a couple things that are moving in the markets out here. Let's take a look at the IBB. Let's go see what's going on here. That's up about $5 as we speak. Let's take a look and see what it has done. This is the daily chart that we're looking at. And if we take a look at from its most recent high, that was on the trading session of December 19th, to the low that took place here with some volume, good volume on December 23rd. That low was at 292. So from high to low, price right now is trading right at the 0.618 retracement level. The exact 0.618 is 308.79. You're trading at 308.53. A close above 308.79. That says we likely see a move to 313 to 316 out there. And I suspect that is more likely of an outcome as we come into Monday, Tuesday of next week. And that is on the IBB, the iShares NASDAQ Biotech ETF out there. We take a look what else is moving. You've got Laboratory Corp LH is the ticker symbol. That's up $4, about 3 7/10%. Again, this is a daily chart out here. This stock chart looks pretty good to me. Let me see. This looks like it's at maybe all-time highs, 52 weeks all-time highs. In fact, it's up over this is pretty good. Here is the line of consolidation or resistance area. And that was at a price. Whoops, didn't mean to do that one. That's at a price point of about 108.09. So right now it's taking out a swing point. That's from the most recent swing point. That's from October 31st. That had 900,000 shares. You've done 223 already in 14 minutes of trading out here. So on the A to B equals CD pattern on that Richter scale, let's go take a look at its price projections out here. It's going to do most likely more than a 1-to-1. It's probably already at the 1-to-1. Close. The 1-to-1 gets you to 112.40. Yeah, it's actually hit it. Looks to me more likely this is headed to 116.17 or so. That's ticker symbol LH, like for lean hogs out there. Amazon moving to the upside, up $4. Illumina is up $4, up 2%. Let's go check in on Illumina. ILMN is the ticker symbol. Let's go see what this is doing. Just really consolidating. Oops. Consolidating at its highs out here, but Illumina had one heck of a nice breakout all the way back back here on the trading session of October 21st. It did it with volume of 3.6 million shares. So we had wide price spread, accelerated volume. All that Illumina did was come back and it tested that area back on the trading session of December 16th with 1.2 million shares. 1.2 million shares going against 3.6 million shares. That's a beautiful thing. Right now, Illumina needs to clear 190.54, and then it'll go take on that swing from October 31st. Only 1.2 million shares up there. The high is 197.37 out there. ILMN is a ticker symbol. Let's look at a couple of things that are moving to the downside out here. That being Synaptics, SYNA. That is off about 5% this morning, down $3.85. I don't see the reason behind it. It doesn't really matter out here. Right now, this is pulling back with volume of about 146,000 shares. It's likely going to come back here and test this little high volume ish type low. I'd have to say actually probably comes back here to this hammer candle, the top and or the bottom. So if we take a look, there's a little hammer candle right out here that has held as support at 63.88 to 59.06. Synaptics. You don't want to see it close below 59.06. That would be a bad scene for ticker symbol SYNA. If we take a look at, let me see, what do we got here? Here's a big one to the downside. MIMEDX, MDXG. What is, don't know what they do. I don't care right now. Let's just go see what the stock chart is doing. So this thing is coming back to its breakout. This equity broke out on the trading session. Well, the breakout took place from the trading session of October 10th, 2014. The low there, 689. The high, 718. So it looks to me like this has got further to go to the downside out there. Excuse me while I just take a swig of some green juice. Sorry about that. Just need to rehydrate the throat out there. So trade at 926 looks like it wants lower price. If it's going to find support, it's going to do it right at about the price point of $9 even Steven. So another 26 cents or so, you'll know. That had 2.9 million shares. That's the widest, highest volume day. Good price spread out there. But you're pulling back with too much volume. Already done 1 million shares, so I suspect this is going to come at least all the way back to that breakout area in the $7 range or so. Ticker symbol there is MDXG. Also moving to the downside, lose a little bit of weight this morning here is Weight Watchers, WTW. Looks like Weight Watchers giving a New Year's resolution of losing weight and following through with that. To the downside, trading out at 22.85 as we speak right now. Let's go see where Weight Watchers is going to trade into. Weight Watchers had broke out back here on the trading session, but broke all this thing really did. So let's take a look at what Weight Watchers actually did on its stock chart out here. Let's go ahead and remove a couple of things just to make this look a little bit easier. I'll clean up the chart just a tad. We'll go ahead and even do that too. There we go. So here's the Weight Watchers chart. Now, Weight Watchers lost a bunch of weight back on the trading session of February 14, 2014. That was weighed in at 29.33 on that prior session. We can see that level acted as resistance. That's the blue horizontal line going across my screen. So it was not able to bust it to the upside. Pretty good chance that what Weight Watchers is now going to do is come down towards the bottom out here. So it had broken out, tried to break out all the way back here on May the 1st. So it says 1952 or so. It's trading at 22.80 as we speak right now. Seems like that is likely where Weight Watchers is headed to. Ticker symbol there is WTW. Let's see, what else do we have here moving to the upside or to the downside? Let's go check it on the VIX index. Let's go see what it is doing after that one day. Now, it is traded above the 50-day exponential moving average. No question about that. If we take a look at that, you're trading out at 17.39. The 50-day is 15.75. So I would say a pretty good chance that what the VIX actually does is pulls back to that 1575 level. Maybe it's going to go ahead and pull back even further, like to the bottom of that Bollinger Band. So if it pulls back to the bottom of that Bollinger Band out here, that would take us down to about 1254, and that would put quite a bit of juice inside the markets out here. This is Steve Rhodes. This is TFNN. Looks like we just deleted it. We've got the Dow up 105, S&P at 10.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up 120, S&P is up 10, Composite up 27. Hope everyone out there had a safe New Year's celebration. Great to be back with you. Of course, like yourself, would prefer to have seen them just simply extend this holiday. That would have been a nice thing to do. But hey, we're back with you. Full lineup of programming today, and then we'll be back in the saddle again on Monday for you. As far as what it is that you want to focus on, in my opinion, out here, probably comes to the most bearish chart that we have in the market. In my opinion, at the moment, is really the Dow. So it's the Dow that you want to focus in on. Now, the reason why I say it's the most bearish stock chart patterns out here, and that's not because of where it is in relation to the highs. The highs at 18,103 back on December 26th out here, and not because of that 160-point move to the downside. It's just simply that the day prior to that, quite frankly, which was December 30th, we saw the price oscillator. That's the bottom portion of my chart out here that you're looking at on TigerTV. We watch it get down through the zero line. Now, when it gets down through that zero line, it tells you that it's the sellers that are actually in control of the market. Well, let me tell you, the sellers certainly had control of the market on Wednesday. Of this past week as we were going. So now, but we're dealing with holiday trading, so pretty easy to throw your weight around, so to speak, out here. But nonetheless, the real key is going to be, is this price oscillator going to get back above the zero line out here? It's still below zero as we speak right now, even with this nice bounce that we've seen inside the marketplace. If we can get back above the zero line, that says that the rally that we're in should extend into the early part of January here. The question is going to be, is it going to be next week, or is it going to be within the next couple of weeks out here, 15th, 16th, something like that, 17th, 18th, 19th, 20, 21, 22, somewhere right around there. I don't know the answer, but we'll get enough signals from the marketplace. So we'll get some signals. We'll want to pay attention to what's going on inside of the VIX index. Again, the VIX index on Wednesday, one-day rate of change of 20% out there. It was inevitable that you would see the market bounce like it's bouncing today. It should be of no surprise to you. When you see that take place, you don't want to see that. You want to see a market that is, cascading lower for those that are bears. You want to see it closing lower and not have that kind of one-day rate of change inside of the VIX index out there. So if you want to be a day trader, probably one of the single best tools that you can use. So it's really today going to be about the Dow, in my opinion. The other indices out here did not get below the zero line in their price oscillators. So now you're got 30 stocks going against thousands. If we took a look at the composite, NASDAQ composite, or the NYSE, they're still in full control of the bulls out there. I did notice that Apple is struggling here this morning. She's trading out at 109.35 and trading back into, well, how'd I end up with that chart? Meant to pull Apple out here. Come on, Apple, there we go. So we take a look at the Apple chart here. We'll just finish off by taking a look at Apple. So Apple broke out just as the market did on December 18th. That was the last breakout. 59 million shares to the upside out there. We've done 10 million shares in the first 27 minutes of trading. Now, at this stage of the game, what Apple has done is come back to the breakout area. So if Apple can close... Why isn't it doing that? If Apple can close above the gap that it's testing, 109.84, that'll be another message for you that the market's probably going to go ahead and bounce a bit higher here. Closing below 109.84, that says that the lows ought to get tested inside Apple. The recent lows, that would take you back to the December 16th area, probably around 106.26. So at this stage of the game, Apple putting a little bit of pressure taken away from the NDX 100 simply because of its weighting inside of there. But that's, that's the weak link that I see inside of the market as we speak right now. So, folks, stay tuned for the Nadex Bull-Bear Binary Option Hour. It's great to be with you to open up 2015. Let's make sure you and I that we've got a great one out there. And see you. Have a great weekend. I'll see you come Monday morning. Take care, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The art of timing the trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
You're watching Tiger TV.